Brilliant. Okay, fantastic. So I have a piece of fantastic news for all of you that through the very clever suggestion from our esteemed moderator here, Ariel, he suggested that because we had such a wonderful panel, and indeed we do have a wonderful panel, people who have not only raised a great amount of money, but also sold companies. So it's a really interesting, this is more of what Spain needs. So on this basis, Ariel suggested, while we have all these people together, we should extend the session. So we're actually going to extend the session by 10 minutes and talk about 40 minutes. So big cheer for the panelists for agreeing to do that. Big cheer for everyone. Okay, fantastic. Okay, no, it's a big deal. So all the microphones are working. So I'm just going to step away. So Ariel, take it away.
Excellent. Thank you. Thank you. Hey, so guys, I'm super excited. Actually, this is probably one of the last panels of South Summit. And as always, I mean, you should be thinking about the exit and about liquidity for your companies. Just before I present the panel, who of here is an entrepreneur? Entrepreneurs? Okay. Investors? Okay. Corporates? Okay. People that were bored and came over to spend some time? Okay, excellent, no problem. So listen, guys, my name is Oriol Juncosa. I run a small large seed fund called Encomendas Smart Capital, okay, and I'm very pleased to run this panel. And we will have this panel with, starting here from my left, we will have Andre Michelena, former CEO and co-founder of TicketBiz and partner at All Iron. TicketBiz is an online marketplace where users can buy and sell tickets, and the company was acquired by StubHub for 165 million euro in 2016. Then we have Gonzalo Ortiz, co-founder of Mitula and partner at Onza Capital. Mitula is an online classifieds portal. They did an IPO with a market cap of 150 million Australian dollars because they went to Australia to the IPO. That's at the other side of the world in 2015, and they were acquired, so double exit, okay, in May 2018 by a Japanese group for 187 million Australian dollars. Then we have François Derbez. He was CEO and co-founder of Top Rural. Top Rural was a top site for renting rural accommodation in Spain, and it was acquired by HomeAway in 2012. And finally, we have José del Barrio, okay, former CEO and co-founder of La Nevera Roja and CEO now of Samaipara and ABC. And La Nevera Roja was an online food ordering platform, and it was acquired in 2015 for 80 million by Foodpanda. So effectively, we have people here that have first been entrepreneurs, and now most of them are also investors, okay, which is very good, so they do it full cycle, okay? So we'll try to make a few questions at the back end of the panel, but we will start now by, I want to understand a bit more about their companies, about how was the journey like since the inception to the time in which they sold. So please, guys, if you can tell us a bit more about, hey, how many years did it take you to go from start to exit? Okay, how many employees did you have when you sold the company? Okay, in how many countries you were operating? Okay, and how much funding you had raised? Okay, so it's years, employees, countries, and funding, just so that people understand what it takes to be successful around here.
Okay, so TicketBiz was founded in 2009 until we sold it in 2016, so 7 years. Employees, we finished with 400 employees, and selling in 40-something countries with 14 offices around the world and over 400 employees.
Excellent. And how much funding did it take?
14 million euros total, 1-4.
Excellent.
Okay, Mitula Group was founded in 2009 as well. It took us 6 years until the IPO. We had by that time around 50 employees. We had a global footprint in 45 countries and offices maybe in 3. No fund.
No funding.
Self-funding.
Self-funded. That's interesting.
Yeah.
For the entrepreneurs. Please, Francois.
We founded Top Rural in the year 2000, sold it in 2012, so it took us 12 years to exit. 50 people working by the time of exit, 12 countries, but all operated from Madrid. So only one office in Madrid operating different countries. Although we had 12 countries, 90% of the business was still in Spain, so it was mostly a Spanish company. And we invested in total 50,000 euros in the year 2000. So it was mostly bootstrap and a little bit of own savings, previous savings, and friends, fools, and family.
Excellent. Jose, please.
And
So it was first years, employees, countries, and funding.
okay, so we founded La Nevera Roja at the end of 2011. It took us 40 months since launch until exit.
40.
40 months. We were 60 employees. We were just operating in Spain. We were about to launch Italy when we were acquired, the second country. The other question was?
And then it was how much funding had you raised?
10 million.
10 million. Excellent. So that's, you can see here that there's a wide array. I mean, from Jose was certainly the fastest, okay? And França, it took it some time for you, okay? And then from bootstrapped actually to, requiring 14 million, okay? So there's a wide array of examples that you can tell about it. So what was, when you guys were building your companies, okay, what were you convinced that would be sort of your key value drivers? Okay, in the sense that, hey, what were you as CEOs of the company thinking, hey, my company will be valued because A, B, and C, so I need to get my organization building and creating along those lines?
So in our case, Ticketbit was created by copycatting an American company. It was called StubHub. So we use copycat the model, so a marketplace where you can buy and sell tickets. And for us from the beginning, it was very clear that one of the biggest potential buyers was them. So what we did is the strategy was to launch in countries where they were not present. And it worked. When they look away of the US, start coming into Europe, they see, and we were everywhere. So we already done the job that they wanted to do. So for them it was, okay, it's much easier to buy you than to fight against you in every single country. So they bought us. But we have that very clear from moment zero. We needed to go international very quickly and had that global footprint.
In our case, we really need to grow fast because it's a company based on traffic. And traffic gets complicated as the time passes by. So we first focus on content and get type of different languages inside the same technology. So it would be technology, content, and then organic positioning through different countries. So it was not about people or not even about investing money, but being fast in launching lots of countries.
When we first negotiated with TripAdvisor, a potential sale in the year 2011, and then we sold to HomeAway 1 year later. We did it wrong, I think, because I thought that I would sell a company for an EBITDA multiple, so multiple of the profit, and I had been maximizing the profit for a couple of years. So we had a 4.5 million revenue company and more than 2 million EBITDA. And it was wrong because the buyer was mostly valuing the revenue and revenue growth. So basically, to optimize the profit was not a good strategy to get a higher price, selling price.
But the question was more about when you were building your company, okay, what were the value drivers that you saw? Not so much thinking of the exit, but thinking about, hey, building a big company. So you guys was more sort of going international? How would you define the way in which you were actually building value, building your company?
The value in our case is probably the same as Ticketbit or even yours, is that we were a marketplace. So the value of the marketplace is to build a strong supply, strong demand, and to be the leading player on the market. So in Spain, Top Rural had a market share of above 50%, and I think the value of the company was really in the marketplace and in the market share, leading market share. Yeah.
How about your case?
Yeah. In our case, so we launched in Spain. Was at that time like a 1.5 billion market for food delivery. The online penetration was so low, like I don't remember well, but it was like 2%. So it was a new channel, a new market to be created by us. There was a lot of competition from startups, well, both from startups and also, well, another big startup called Just Eat. Now it's a 5 or 6 billion euro company. So what we have super clear from day one is we needed to be the clear leader if we wanted to have a nice valuation multiple, or to create value, we needed to be the leader. So we had super clear that it was a winner takes it all market, and we optimized for growth and for gaining market share and probably doing some crazy things, to be honest. Because we were completely sure that the third and...
You can tell us crazy things, don't worry.
Was mostly financial aggressivity. So when you invest in acquiring users, the aggressivity is measured in how much time it takes you to recover your customer acquisition cost. And that's an arbitrary decision that you take. When you have a super clear vision, long-term vision, you are able to do some crazy things in terms of LTV CAC, that ratio that I mentioned. When you are just thinking short-term, you are much more worried about what is happening today. So what we did from the very beginning, so we had Sin Delantal, we had Just Eat, we had like many food delivery companies, and we needed to be the leader, and we were like 1 year and a half, 2 years behind at the beginning, and 40 months later, we were the clear leader, clear top of mind, and that was what we were looking for from the very beginning, and it was very interesting that at the exact moment our competitors knew that we were the leaders, they came to us, they needed to buy us because they just IPO like 3 months before, and it was super bad news for them that they were losing a relevant market for them. So it was, well, we were lucky to see from the very beginning the main value driver of the business, we think.
What some people say is that, hey, you need to build your company for growth, for value, for long-term vision. It's not a great idea to build your company for, hey, I think that this is going to be my buyer, or I have 2 buyers here. But Anders, certainly you from the beginning thought about sort of the other side. So what do you guys think about it? So should you optimize for a buyer, okay? Or should you actually think, hey, I don't care about the buyers. I want to build what I want to build. I want to build long-lasting value, and then someone will buy me.
So I think it's a combination. So nobody's gonna buy you. You don't buy something that is worth it, that is long-term value. So if not, it's impossible that anybody's buy you. So you need to build a company. That's the first thing you need to build. Company that makes sense, that at some point is gonna be profitable, etc. That said, I don't think it's a bad thing to think from the beginning who is gonna be your buyer, and it's not gonna drive all your decisions. But you have your potential buyers. You know, okay, if I need to enter country A or country B, maybe it's better that I enter country A. Same things stand, because maybe that guy is going to prefer me to do that, for example. You have it on top of mind, not driving the decision, but at least to have it into account when over the life of the company. I think it's not a bad thing.
So basically, you would say from the start, you need to know what's your buyer universe somehow.
Exactly. Know your buyer universe, know what they're going to value. So, for example, Francois was saying that in his case, he was drive more, but because of revenue. So probably, if he knew that before, he would optimize it completely different, right? So have that in mind. What they're looking for, what the potential buyers are looking for. But then, of course, concentrate on building the company, and then that buyer will come. If you do things right, that buyer from one of those will come at the end.
I agree. I think you have to focus on deliver a good product, and it depends of if you work to the B2C or B2B universe is more into how to proceed with the product. In case of having a good user experience, is probably what the B2C businesses look more, and being really disruptive in, I don't know, maybe the traditional industrial sectors. You know, if you are able to be diversified in sectors where the big players are not still being digitalized, then you're going to have a lot of potential buyers just from the industrial players. If you are really into the online new business models, then you probably have to think about competitors or bigger players worldwide. And I agree about the global footprint. You have to lead somehow kind of a country or region for being interesting to be acquired. It's quite unusual to buy something that is not leading the business somehow. So I think leading part of the business in one specific region is crucial. Being really good in user experience, on having a really good product, and having an approach on an industrial player. That's probably what it helps you in terms of buying. But I don't think you have to really think about how to manage your company to buy it or to sell it.
In your case, effectively, you went through the IPO route, so your company could have been sort of here in 2100. I mean, for 100 years, let me put it like that.
Yes. Well, if you think about it, whenever you get one specific site, the buyers are still. You have a big universe of buyers, but if you keep growing and growing and growing your company, the buyers are going to get in smaller amounts, because big companies don't like to buy big things, really big things. So what we decided is that instead of trying to sell the company, which was quite difficult because of the size of the company, we decided to try to make our own marketplace. It's to create your own market and to put it outside for the people to invest on it.
So, I mean, this is a bit controversial. I mean, do you agree with that in the sense that, I mean, smaller companies are easier to buy and sell? So let me just speak on that. I mean, so because there's a tension here, no? I mean, smaller companies, maybe there's more liquidity. Bigger companies are sort of not as easy to sell. So should we settle for smaller companies?
Well, it depends on what you want to do. We never thought about really selling the company and not being there. What at the end happens this year, by the way, but not in the early times. I think whenever your company is jumping from 50 billion valuation to 100 billion valuation to 150 billion valuation, your potential buyers are getting smaller. And you just have to realize that if you want to exit. In the other side, in our case, the company was really profitable, and we didn't care about not really selling it, because every year we were paying dividends and we were happy about the results. So it's a combination of the amount of years you dedicate, the effort, the effort level that you have put into it. If you are one entrepreneur of three, which is always different, and it can help you in the way. I mean, I don't know. I think it's good to think about when to sell the company, but it's not good to think just trying to reach that goal.
What's your take on Francois, on sort of size, how to think about, I mean, whether to optimize your company for a sale?
I think bigger is better, because you sell mostly leadership, local leadership. I totally agree that it's much better to be the clear leader in Spain than to be average on different countries. I think that it's better to sell early than too late. I know many people regretting not to having sold their company, and I don't know anybody regretting to have sold it. Basically, so in Top Royal, for instance, we could have sold in the year 2007 after 7 years, more or less at the same price than we sold in 2012. So 5 years later, more or less the same price. When you're growing fast, you sell a much higher multiple. When you grow slow, you sell at a lower multiple. But on another hand, I think you shouldn't develop a company to sell it. I think the objective of the company, short term, mid term, and long term, is to satisfy the customer, and that the sale of the company is going to come after. So if you get the satisfied customer, repeating customer, increasing their spending with you customers, then you will have a good exit. But if you think too early about the exit, then maybe you won't take care of enough of the customer. I think the same for the rounds, capital increase and potential exits. It shouldn't distract you from the customer satisfaction.
And so, guys, in your case, who, if it was not you, realized that probably it was the time that you guys sort of sold the company or realized some liquidity on the company, and how was that realization? The sense that you guys have, the company was your child, no? Somehow, and sort of letting your child go, thinking that, hey, maybe in 6 months I will let my child go. It's tough, no? So how did you realize that was the moment, or maybe you were just tired of keep sort of pushing? Any sense for the guys that are, for the audience?
Yeah. Well, quick note on the way of not building a company just for the sake of selling it, like optimizing for selling it. Super quick comment on this. I do think for the ecosystem and overall, I don't see it like very healthy to start building companies and just start optimizing for exit from day one. I think it's basically not healthy, and I think you need to optimize for long-term value creation. And obviously, then you need to take care of get liquidity to your investor, etc. But long-term value creation, I think, should be the motivation when you start a business. So to your next question, I think it mostly depends on your cap table, so your capital structure. Sometimes it's your sole decision, sometimes it's not. I think that's important. When you have investors, they have their own investment cycle, typically 5 to 6 years. So that's something that you need to take into consideration, and it's fair, and I think it's healthy that you create those liquidity events to follow that. If you finance the company through VC or whatever, but in our specific case, it was so very natural. So they came to us, they offer a certain amount of money. A few weeks later, they offer much more money. So at the end of the day, we had a very relevant stake in the company, but we weren't the only owners, sole owners. So on the one hand, it was the capital structure, and on the other hand was the timing in the market. So it's very important to understand when the liquidity in the market, if liquidity events are created in its market. In our case, there were 2 IPOs at that, 3 IPOs in a period of 6 months. And when there are IPOs, there are cash available, and also there is a need for those guys to keep telling, to keep increasing or taking care of the value of the stock. So they really need to tell things to analysts and to stakeholders. So they need to buy stuff, buy companies, so grow inorganically. So in our case, there was a clear timing. It was a winner take your own market, super fragmented, with 3 IPOs in a period of 12 months. So it was the perfect storm for a buyout or for the exit.
So in your case, you had 3 guys knocking at your door.
Well, 5.
5 guys. Wow, that's great.
So in our case, it was maybe a no-brainer. So we didn't have much alternatives, but I'm sure there are a lot of different scenarios.
And Francois, in your case, it was more a thing of, hey, wanting to close a personal endeavor, or sort of there was also momentum in the market?
I think the right moment to sell is when the company is more valuable for the buyer than for the seller. After 12 years...
That's a tagline, eh? That's a tagline.
If you think your company is worth much more than the seller is thinking, keep it and grow it, make it worth more, and then sell it later. With Top Royal, actually, I was quite willing to sell. We didn't have many potential buyers, so we couldn't have such a good negotiation power as Jose did in La Nevera Roja. But my next, when I started Top Royal with 25 years old, I was quite sure that I would sell it. I would want to sell it at some point. I'm not sure to sell it, but I was sure I didn't want to retire with 67 years on the same company, from 25 to 67. So yes, I thought we will sell it at some point, and I think we should have sold it earlier. With my next company, Indexa Capital, I think I'm much more into the long term because it's a slow-growing business. It's a very long-term business, and I'm very convinced that in 10 years it will be worth way more than it would be offered today. So I think we're creating constant value, and then every year it will be worth much more. And I know more about this worth than the potential buyers. So I don't think we will sell it, because I think we're just going to grow it long term, and maybe sell it in the very long term. It's more about the buyers. When the buyer is there, then it's a good moment to sell.
And in your case, Gonzalo, I mean, you had already done sort of a partial sale of the company. Okay, certainly you had liquidity, and at some point in time, and you had probably sort of a prospect of owning the company for the next decades, no? I mean, what moved you to sort of say, think about, hey, selling again 100%, but that now 100% of your company?
This case is, it's a combination of both. In one hand is because it's a really big merge. We are merging with our main competitor, which is a Japanese company that has it's kind of a brand that is called Trovit, and that does the same thing that Mitula does. And together, we will have a unique platform of almost 200 million users per month, and probably around more than 600 million ads updated every day. So it's a huge monster, and it's something that is attractive as a businessman to lead with. And yes, and probably it's a combination of being here for 11 years already and managing a company from Madrid in Australia, worldwide. So any kind of help that will came in our side to put a bit of relax in that part, it's really welcome. We are three founders that we've been working together for many, many years, but at the end, time passed by, and you can notice that you are not as young as you used to be and as strong. So yes, maybe it's looking at something that it will become really big the day after we merge, and that's really something it's attractive for us.
How many of you here is thinking about selling their companies? Okay, how many of you here? One over there. So, how many of you here is thinking about their next stage, about sort of a big round, taking the company on an international level? The entrepreneurs. Okay, that's good. So, imagine that you have invested in one of those guys that are thinking about sort of the next stage, but they have actually already done sort of a funding round. Business is going great, but the entrepreneur comes to you, and now actually you are investors, all of you, the four of you, and they tell you, listen, I know that our last round was at 20 million post. Okay, now I'm being offered, and you put significant amount of money there. Now I'm being offered 40 million. For me, it's a big amount of money. I own 60% of this company. I know it has great potential, but gee, I mean, I can buy myself and my sons and my grandsons many things with that. And you are investors there. You invested in the 20 million. You see that this company could be 200 million. What are you going to do with them? What could you tell them? What would you tell them?
So I will tell what they told me.
Okay,
so
tell me.
For example, for us, the company was growing over 100% every year. We're selling already more than 100 millions when we sold the company.
Fantastic company.
No, fantastic company. So
why
the
sell?
Exactly, that was exactly the question. So why do you sell? And we have a conversation with one of the investors, and the investor, Jose Marin, is a great, he has been named his partner has been named last month the best business angel in the world by Forbes. So really cool guy, he knows his stuff very well. And he was telling us that, what you need to do is, if I would be in your shoes and I would be not my first exit, but my second exit, and I have a financial comfort, I will not stay by any means. You guys need to continue, etc. But I put in your shoes, you have risked it all, you have invested in the company, you don't have anything else. I will totally understand if you guys sell. I will totally understand. It's a life-changing event for you guys. After that, you can do other things. So
Even if you think...
I will back you up, whatever you decide, I'm totally with you guys. go ahead if you want to.
Even if you think, gee, I only make 2x as an investment, I could be making 10x.
Yeah, at the end, is for me, it's very clear. It's the entrepreneur who needs to make a decision. It's very different for me now, as I already make my first exit. If I ever do another company, it will be totally different. I will have never sell. I will have continue and try to build a much bigger company. And that's why one of the reasons I think there hasn't been too many big exits in Spain, because there hasn't been too many second-time entrepreneurs with already an exit. Yeah, sorry about that. Yeah.
What would you tell them to one of your investments if they come back to you with that?
I think if you already have venture capital inside your company, you have already a kind of a industrial or institutional shareholder, you're going to have to talk to them, because if they did right, they're probably going to have the right of proceeding with that sell down or not. So it's going to be really linked to the amount to the valuation and the amount of times these investors are taking the money out if they are selling as well. So you gotta think before starting to think about selling. Is the shareholder agreement that link it to the price in terms of approving that sell or not? So that's probably one of the first point to work with. And in the other side, listen, is really open to. I think I agree with Ander. Is thinking about what do you want for your future? You know, if you're gonna be taking an extraordinary amount of money and that's what you want and that's what you're looking for, then probably is the right moment. But I can tell you that when we start thinking about selling, we were a group of people thinking about what to do with the company. The company was going okay and was profitable. And some people were talking about selling the company already. We were other people talking about growing a little bit more. And by the time it took us, let's say, from 2009 to 2014 to start thinking about selling. And just because waiting 1 year, we multiplied by 5 the price. So sometimes the first thought about selling maybe is not the correct one. But this is, a personal thing and really hard to really give advice on this.
Any additional thoughts on that?
Yeah, I think there is something that's trending now. It's to do a partial exit, to sell a part of your shares in a secondary operation, and selling part of, as an entrepreneur, if you sell part of your stake in the company, somehow you're diversifying. You're already taking something home, maybe buying a home, maybe paying a debt, keeping most of your investment in the company, and so you keep playing for maybe 10 times more. But you already bring something home, and you diversify a little bit.
And your wife is happy and says, "Good, well done."
You decrease the stress home. You're not risking everything every year.
Yeah.
So I think it's quite reasonable at some point when the business is already some success to sell part of your shares, even 1% per year, for instance, and to diversify.
And any additional thoughts?
Well, I think most of the points have been already said. I'm mostly aligned with all your comments. I think when you agree to bring on board institutional investors, you agree on certain terms, and you are not alone anymore. And you need to acknowledge the fact that you choose. Completely, you were completely free to choose that option, and you agree on some terms, but also at the same time, and you need to be fair, and you need to respect those terms over time. It's also true that 3 years, 4 years, 5 years after selling that agreement, sometimes things go completely different than expected, and I think when the people sitting around the table are reasonable, there are always options. The one Francois suggested is a very interesting one. There are more and more secondary funds that allow entrepreneurs get some cash back home. There are many options, but it's a difficult trade-off between being fair with your travel companions, and also being the owner or the founder of the company and having your own personal interest, etc. And that's why, excuse me, Oriol, that's why choosing the right investors, it's key, and even more than the right VC firms, but the people behind and the person that is gonna sit in your board of directors or is gonna be talking to you over the phone and have a very, very strong personal connection with them, so you can talk about these very sensitive topics when things go very well or very bad, or
So just one final thought from each of you. Hey, what does need to happen in the Spanish ecosystem so that those guys here and your portfolio companies and your companies, we can manage to have a $1 billion exit, okay, at some point in time over the next 5 years? Is this a matter of mentality? Is this a matter of traction? Is this a matter of international technology? I don't know. I mean, where would you put the stress for the audience to build that great exit? So,
I already started
Yes,
before.
yes,
So
sorry.
basically, for me, it's an ecosystem need to develop. When you start, the ecosystem in Spain is very new. I remember, and you guys will see the same 6-7 years ago, there was pretty much no ecosystem here. There was no entrepreneurs, very little money. It was very, very different. It has evolved and grown tremendously, but still a lot more to be done. What you see in the ecosystem is first time you're an entrepreneur, whatever amount of money they put in front of you is already like, wow, I'm gonna go higher. I have already this. It's a life-changing event. I'm gonna take it. But once you build your second company, that feeling changed. And when you want to build something very big, look, for example, at Francois. The first one, he saw it, he wanted to exit, but now in Dexa, he's thinking about 10 years and making something huge. And I'm sure she's going to do it. And I put a little pressure on you because I'm an investor as well there. So, but I'm sure he's going to do it. And that's different. It's different. You need to have entrepreneurs who have already done it, who are already, who wants to have now that second exit, but it's going to be want to do something much bigger. And that's happening right now in the Spanish ecosystem. We are now ready for that.
Yes, I agree. I think the ecosystem is key. Having more money into the ecosystem from different investors. This is getting really professionalized. The shareholder agreement are getting really as the American ones in terms of the rights to grow the company in a certain way. I also think that Spain is not that a big country, so we have to think international. If you really want to build a $1 billion company, you have to think for sure to be open to other countries, and of course being able to hold the company until it gets to that point, you know, because you will have for sure other momentums for selling the company in a specific time, but you have to keep on working and fighting to get the value up. And I agree that there are companies, Spanish companies, that are getting a really good point on this type of value. I personally like a lot FinTonic, as you know, which is growing a lot. It's becoming a really successful fintech company. Now it's opening new countries, and I think if they keep doing what they do, they probably be reaching a really high valuation somehow. They have already big players inside. And that demonstrates that the industry is betting for that, you know. So sooner or later it will happen.
We're getting there.
You were getting there. You're not optimizing for EBITDA right now, no?
No, not at all. Totally into growth and volume. That's a key learning from Top Rural, definitely. A startup is not about making profit. It's not about neither making loss all the time. I mean, you have to go to get to profitability. You have to be sustainable, but you have to maximize growth on the top of profit. But I'm thinking we're getting there, not for Indexa, but for Cabify, for instance. Cabify is a private company worth much more than 1 billion, and that's aiming to go to the stock market in the next month or years.
If the government
let it. No, but it's already diversified. I'm not sure they are so dependent on Spain.
No, that's
Hopefully.
True, that's true.
So I think we're getting there. The Spanish ecosystem, startup ecosystem, is growing very much on both sides. Investors, startups, and we'll see some exits above 1,000 million euros.
Yeah. I said that about the government because I really think it's sad that we have. I think I need to be transparent here. To me, having these companies, 1.5 more or less billion-dollar companies as Cabify, and not having full support from the government, to me is sad as as a Spaniard, is so sad. And last week we had this news about changing regulation that clearly affects one of the most valuable companies in Spain. And to me, that's extremely sad, and that's a message for the government. That's one thing. And the second one, as a country, I think one of the things that are missing clearly is we are super bad at celebrating success. Extremely bad at that. And I can tell you one example is very illustrative. Is probably most of you don't know there is a startup that was founded in 2007. Right now it's public. It's $3 billion market cap, and it's a startup. And now we keep talking about when is the first unicorn is going to be born, etc. It's a guy, a 38-year-old guy called Manny, that founded MásMóvil in 2006, and they wanted to disrupt the telco industry, and it's worth $3 billion. And that guy is not here, is not a hero. We are not celebrating that. We are just complaining about things, and there's always this kind of gossip, or yeah, probably he has done something wrong, or that kind of Spanish comments that are not healthy for the ecosystem. So I think we really need to be much better at celebrating success, and when someone does it right, just celebrate it. And I think that will make the wheel spin faster. And I think that's something really important.
So guys, I think that on that note, let's celebrate such a great panel, and let's celebrate the success of those four entrepreneurs. Okay? Thank you.
Thank you. Thank you.